Meeting is being recorded.
Excellent. Thank you. So excellent. So we're all here. I would like to call this meeting to order at 12:02 p.m. I would also like to just start with a land acknowledgement. So it's standard now at HRM that we do begin our meetings with this. So the Halifax Regional Municipality is located in Mi'kmaq, the ancestral traditional lands of the Mi'kmaq people. The municipality acknowledges the peace and friendship treaties signed in this territory and recognizes that we are all treaty people. So, thank you. Next up, we'll do a roll call, please. So, Councillor Cleary.
Hello and good afternoon, everyone.
Good afternoon. Thank you, Councillor Cleary. Mr. McQueen.
Good afternoon.
Excellent. Nice to see you. Mr. Hollis.
Good afternoon, everybody.
Excellent. Hi there. And Mr. Martin.
Present.
Excellent. So roll call and sort of an AV check while we're in this virtual. Sounds like we can't hear everyone, which is great. Liz McKenzie has sent her regrets. So with that, I'd like to just take a minute to thank Annie Sherry, who is our from the clerk's office extraordinaire, for all of her help with pulling together these meetings and all the communication. So Annie, thank you so much for everything you do for us. Really appreciate it. Yeah, that's great. I also would like to acknowledge I have thank you. One of my staff on the line, Erin Collins. So Erin is our senior treasury analyst. So I see Erin has joined us as well. So welcome, Erin. Okay, we'll move on to the approval of the minutes, please. So that's for December 6th, 2021. Does anyone have corrections or amendments? Hearing none, I'll ask for a mover and a second that the minutes of the December 6th, 2021 Investment Policy Advisory Committee meeting be approved as presented.
I'll make the motion.
Councillor Cleary will second that.
Oh. Thank you. So Mr. McQueen made the motion? Seconded by Councillor Cleary.
I think it was Mr. Hollis.
Sorry, was it Mr. Hollis?
Yeah.
Apologies. Mr. Hollis, thank you for the motion. Councillor Cleary, thank you for seconding. Sorry about that. Again, I do have a bit of a delay on my screen here. I'm going to try and make it through. I'd like to do a meeting not being on video, but if it does get bad, I might turn it off. So all those in favor, please signify by saying yay.
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 Excellent. So that motion passes. So the next up is your business approval of additions and deletions. And Madam Clerk, are there any additions or deletions to the agenda?
Thank you, Chair. The clerk's office didn't receive any notification of addition or deletions.
Excellent. And I'll ask any members, are there any additions or deletions to the agenda?
No.
Hearing none, I will ask, please, for a motion to approve the agenda so that the agenda of the March 7th, 2022 Investment Policy Advisory Committee be approved as presented. Mover and a seconder, please.
I can move to approve.
Thank you.
Councillor Cleary, happy to second.
Thank you. All right. So that's approved. All those in favor, please signify by saying yay.
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 Thank you. That motion passes. So I don't have any business arising from the minutes. Next up, I'll do a call for a declaration of conflicts of interest, please. Does anyone have any conflicts they'd like to declare? Hearing none, I'll assume the meeting can proceed. There are no considerations of deferred business. So let's go to the report. So the report for the quarter ending December 31st, 2021. The report was circulated to the committee. I'm just going to take a few minutes just to walk you through the highlights. of that report. So during the quarter, we had 4 investments, cost of 153 million versus 5 the previous quarter at a cost of 231 million. So our strategy is the same. We're a very consistent group. We don't stay fancy. We take our the preservation of capital very seriously. We continue to allocate to our high interest savings accounts, which gives us a factor of liquidity for those. And we purchase government securities per the policy guidelines. So the investment income is over budget due to higher than forecasted cash and just higher than expected interest rates. So when we were first doing the forecast, there was still a lot of uncertainty with COVID. I'm happy to say that from a cash collection standpoint, as well as an interest rate standpoint, the rates have held better than we had originally forecasted. I think maybe, I don't want to say we were doomsday, but we did take a very conservative forecast with that. And so along with cash collections, we have experienced higher than expected, which is a good news story. So the total cash that we held in high interest rate accounts at the quarter end was 464 million. During the quarter, we also bought some bonds. So those were purchased at a cost of 157 million. So the yields were ranging from just under 1% to 1.37%. And those mature between June 2023 and June 2024. So based on our cash balances, again, prior to COVID, we had some bonds and they matured. We didn't go back into bonds. And again, that was around uncertainty of not knowing when we would need our cash and just not having a certainty of how far out we may need to go. So because things have held on, we've seen relatively consistent cash flows. We were comfortable moving a portion of the portfolio out just a little bit further, just to try and pick up a few basis points. As well, I'm sure if everybody is following interest rates, there was an interest rate increase last week. So I think that's the first of a couple that we'll start to see over the next little while, which is positive for a portfolio such as ours, which is effectively a cash portfolio. So what the municipality does is we budget and we tax people based on the amount of money that we need to raise to meet our budget. So by virtue of that, we bill in April and we bill in October. So those are the two times that we raise our funds. Because we are budgeting to basically zero, like we're not supposed to budget for a surplus or a deficit, theoretically, we would expect to spend the cash that we raise in a year within that time frame. So of course, it doesn't always work like that in practice, right? There are certain ebbs and flows and which times cash flows go out. So that's why, theoretically, if you look at our portfolio, it should be like a 1 year sort of duration for investment maturities. But what we've done is we've looked at the amount of cash that we typically would have and just the ebbs and flows of when things go out. So that gives us a certain amount of confidence to go a little bit further with that portion that I was talking about on the bonds. So that was the big excitement for last quarter. So using the benchmark survey, our 3-month return is 0.19%, 1 year is 0.65%. Both of those are over the benchmark. So we're happy that we continue to outperform our benchmark. And that's because a lot of the investments that would be in the benchmarks, they're like funds. So there would be management fees on top of those, and they would tend to not be able to be managed as efficiently as what we can by just using our high interest rates and by going to the market directly and buying government securities. So that strategy seems to be working for us. So we're happy to continue on with that. And looking forward, as I mentioned, we think we've seen the first of a couple of interest rates that are coming for 2022. So again, that'll positively impact our cash flow forecast. That's always good for investors. It's not good for borrowers, but we are in this for the purpose of this, we're investors, so that is good. So to wrap up, we're continuing to meet our policy objectives. We're satisfied with staying the course. So I'd invite any questions that anyone has. And you guys have frozen on me. I hope that you can still see, but I am going to turn off my video.
Thank you for that. Can I ask on the investment bank accounts, have we seen any upward movement in those, in the rates in the investment accounts, or do we expect anything in the short term here?
Oh, thanks. Yeah. So they're directly linked to prime. So a 25 basis point increase gets us 25 extra basis points. So yeah, so as soon as when prime goes up, they're directly linked. So we see an immediate impact.
Great, thank you.
Yeah, thank you.
I had just a question on presentation more than anything else. The graphic on page 2, the operating fund cash and investments. I'm trying to sort of link that graphic to the commentary that's around it. Is, you know, I guess I often find it difficult when there's a graphic presented and the numbers that are presented are either, you know, maybe a conglomerate or a mix and match, but I'm just trying to follow this graphic and what that number represents. Like if I look at the number at the end of December 2021, it looks like it's hovering just around 280 million. I don't see that figure like represented here. So is that sort of an amalgamation of some of these other numbers, or how is that to be interpreted?
Yeah, that's a great question. Thanks for that. So apologies for not having a clear infographic, first of all. Second of all, it is just a representation of the operating fund cash. So historically, what we've done is we break out sort of operating cash from reserves from trust. So the reason it's demonstrated, it's always been presented this way, and I know that's not you know, we shouldn't just do things because they've always been done a certain way, but the purpose of showing this was to show consistent operating cash inflows. And you'll see around like the beginning of May, beginning of October, or beginning of November, that's when our cash flows peak. So it's just trying to show, you know, the consistency in those operating cash flows and the timing of when they're received.
Okay, that's fine.
Yeah.
Again, it was more just presentation of that graphic without any sort of context around it, maybe, that I was missing.
Okay, well that's actually a really helpful comment. I'll make a note of that, and we'll address that in the next report. Thank you for that.
Yeah.
That's great. Yeah, I appreciate it. Councillor Cleary.
Thanks, Renee. A couple things. So in the report that was circulated, just a little note on page 6 where it talks about the Bank of Canada overnight rate, because I know this came out March 7. It still says it was 25 basis points, but as you alluded to, the bank did increase it by 25 basis points last week. And so just, I'm not sure when that little blurb was written, but it clearly, you know, is a little outdated that way.
Thanks. Yeah.
No worries.
Sorry.
The second thing is, because we're still carrying extra cash, has there been an analysis done? So I know we're still overperforming the benchmark, which is good. But was there any analysis done to say, okay, if we had the amount of cash that you sort of budgeted for previously based on, you know, what you're forecasting the return would be, did we do any variance analysis of what we would have made if the cash was lower at that level? You know, because we're making more money because we're carrying more cash. But if we had the cash we were budgeting for last year, would we have made that budget amount, or would it have been up higher or lower? Any analysis of that done?
Yeah, so the percentages would have stayed the same, right? So it's the benchmarks are, you know, even if we had less money overall, we would have we would have still expected to have that percentage. So we've not done the variance analysis on the cash per se, but the percentage returns are going to stay the same. So which is what we're comparing. Like, we don't look and say, you know, we had $1 million, but we got 1.2 million. So overall, what we would look at to say we're beating the benchmark are those returns. So we returned 0.19%. The benchmark was 0.05% average return. So we're over that. So that is separate from, you know, yeah.
Yeah, no, I totally appreciate that. And I appreciate that you guys are still doing better than the benchmark. My only question was around, did you look at, you know, what the actual return would have been if we had the amount of cash you did budget for? Anyway, that's all good. You know, as we go through, because this time of year, we're getting close to putting the budget for next year to bed. And we're always looking at, especially with fiscal services, you know, all of the funds that we do have available, And of course, we do plug in an amount of what we expect to get for the coming year. So I'm just wondering if any analysis is done of that, but that's fine.
Oh yeah, no, and thanks. That's a great question. So yeah, so we do that analysis, and that is actually updated regularly. So here's kind of the catch. So we knew this was a very conservative estimate, and we do present the actuals versus like the actuals when we very first budget. But throughout the year, as we realize cash flows, I update that projection. So part of that, the whole budget process that goes on, you know, in our system would have reflected the higher bump up as we started to realize higher returns because of, you know, or higher cash because of our balances being higher than they were. So the number that I've put forward for the budget amount of interest that we expect to earn is based off of actuals, not like an original projection from a year and a half ago. So it's all considered. You know, we want to make sure that if we have these funds and, you know, we expect to earn interest off of those, that we actually have a correct amount or a reasonable amount, and that we don't have that too understated. So I just want to provide some assurance that when we look at what's in our books, when we're going through the budgeting process, that number is much more updated than what we would be reporting, because by convention, we tend to report the original projection, which tends to get outdated quite quickly. So yeah, I'm not sure if that provides a bit more context.
No, I appreciate that. Thank you.
Yeah, thanks. Excellent. So you know, hearing no other questions, thanks for the comments. Like, I really appreciate those, and rest assured, you know, we'll make sure that we think about those things when we're pulling the next quarterly report together. So really appreciate any feedback that you have, anything that makes it easier to see. And, you know, Councillor Cleary, to your point of, you know, different variance analysis, yeah, happy to kind of take a look at and see how we can make this better, clearer. So thank you very much for those comments. Yeah, Councillor Cleary, did you have a question?
Not a question on the content of the report. This is so normally I would look at the PDFs that are emailed out to us with the appointment, but I'm just looking on the website. Maybe this is I'm not sure if it's because it's a treasurer's report coming to here and we're going to send it on to Audit and Finance, but there's no link to the report, so the public doesn't have this information that we're talking about right now. Is there a particular reason for that? Is it because it's a draft report? Is it because it's coming from the treasurer of the committee and it hasn't gone to Audit and Finance? I'm just curious about why it's not available to the public as we're talking about it.
Chair, if I can take that question if you'd like.
Yeah, sure, Annie. I saw you nodding. So that's great. Thank you.
Right, through you, Chair, to the councillor. It is because it is in draft form, and so generally the practice would be that once the committee has approved it here, I will go back in and update it so that it's available to the public.
Awesome, thank you.
And thank you, Madam Clerk. Excellent. Again, my apologies. I'm still having some computer problems. Can you guys hear me okay?
Yep.
Oh, thank you. Okay, excellent. Great. Okay, so this will make a motion. Oh, sorry, Councillor Cleary, do you have your hand up again?
No, it should be lowered.
Oh, sorry. Okay, thank you. No, again, I'm having a lag on my end. I apologize. And I'm in the office, so I don't know what's going on with that. Maybe I should have taken it at home. I know my internet works there. Excellent. So if we could have a mover and a seconder, please, that the Investment Policy Advisory Committee recommend that the Audit and Finance Standing Committee forward the Investment Policy Advisory Committee report, quarter ending December 31st, 2021, to Halifax Regional Council for information.
Happy to move that.
Thank you. It's been moved, and a seconder, please.
I can second it.
I'm sorry, who was that seconded?
David Martin.
Oh, thank you, Mr. Martin. Thank you. Excellent. So all those in favor, please signify by saying yay.
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 Excellent. The motion passes. Thank you. The next item I just want to talk quickly about is the annual investment policy review date. So as part of the terms of reference, the Investment Policy Advisory Committee will review our policy on an annual basis and make any recommendations. So I just wanted to mention that and to propose that we schedule that review for September. So what that does is it gives the committee time, if you did request us to investigate anything, it gives us time to investigate that and have that analysis ready for the September review. So this is me putting the bug in everybody's ear to, if you have any ideas that you would like us to be considering for the annual policy review, you can think about it now. We meet again in June. Oh, yes, Councillor Cleary.
Oh, I could have waited until you were done, but I guess my question would be around if we are going to look at the policy for potential changes in September, for the next meeting in June, which will be the intervening meeting, would we get some sort of briefing material? Would we get some sort of, history of past changes over the last number of years to give us a sense of kind of where we are, how we arrived there? And if there are any changes we want to make, then that gives staff obviously 3 months from June to consider those and bring those forward.
Sure. So happy to provide that. As this is a very conservative investment portfolio, so the counterparty names that we would have on, at this point, staff would not be recommending any additions to those. So happy to provide the list of changes that were made in the past. Again, staff probably don't have much of a recommendation for changing. Like we're content that what we have is on par with what other municipalities are doing. We're still preserving our capital. We're quite happy with that. One thing I will mention, there's been a bit of a movement for ESG, so environment, social governance, and how that sort of plays into a portfolio. So if we were going to recommend anything, it might be along those lines. That is a bit of a difficult sort of concept or principle to work into a shorter term investment portfolio, because again, ESG companies, if you're talking about ESG investing, you're typically talking about longer term, solar companies or companies that promote, things that are environmentally friendly or that have those principles. Having said that, there might be a place in a short-term portfolio such as ours for some of those principles. So that might be something, if the committee were to direct staff that is of interest to you, we could incorporate a little bit of analysis around that. But overall, I wouldn't expect sweeping changes for our investment policy. Again, it's more of a corporate treasury, right? So this isn't sort of a pension plan where we've got a 20-year timeline where we're going out and we're trying to invest, and we've got to make sure that the companies that we're investing in longer term, stocks are stable and things like that. This is a different sort of treasury where it's our focus is on liquidity. Just given the shorter time frame that we actually have with the funds. So I think in the past, maybe some credit unions were looked at by being potentially added to the counterparty list, but ultimately the committee decided against them. So happy, Councillor Cleary, if that's the committee's wish to have sort of a summary of past changes, we can have that and bring it to our June meeting and then have a more fulsome discussion for any other additional work that would the committee would like presented for September.
I do remember there was at least one, maybe two references in the staff report around, because of a change of X that was done a while ago, we were able to increase our return to this, just as an example, but it didn't say what those changes were. So, it'd be nice to know, a little bit of history of what those were.
Oh, happy to provide that. I can give you a little bit of context now. So the first change, so there's two changes that are reported that we do benchmark in each report. So the first change was around the high interest savings accounts. So prior to that change, I think it was before I was here, so it may have been, I think maybe 2013, I'd have to double check, but the way the portfolio was managed was that to get exposure to financial institutions, BAs, like bankers acceptances and bearer deposit notes, BDNs, in the name of a financial institution were purchased. So for example, rather than having $50 million in a high interest savings account at CIBC, the portfolio would have invested $50 million in a banker's acceptance. So it's actually just a product you can go online or you can go and buy through a broker. So the switch that drove that change was to open up these high interest savings accounts, which at the time was, I guess, a newer sort of offering from the banks. So that's around those ones. There's a couple of benefits to those, like they add liquidity. If we purchase a banker's acceptance and then we determine that we need the funds, we would have to sell the banker's acceptance because it's an instrument. Versus having the funds just in a high interest savings account, you can draw those out immediately. So they have a real liquidity advantage to them as well. When we see rates go up, it's preferable in an environment where interest rates are rising. So for example, if we bought a BA and it was a 3-month BA and it was earning 1%. Well, if interest rates increase, we've got to wait until that instrument matures and then reinvest it at a higher rate, versus an investment savings account, which we get the bump right away on the interest rate. So that's what contributed to those. The variation in the yields that were the previous financial instruments were earning. The high interest in savings accounts were just better. So that's where that one was. And then the second item that we report on is just around how we balance the portfolio and how we determine to have the funds, how we split them up on rebalance. So in the past, the way the portfolio was rebalanced was daily. So daily we would come in and say, okay, CIBC has X amount of dollars more than TD, and we would move money from CIBC to TD. So there was an intrinsic value of having to move those funds. You have to pay a wire charge, and then you are possibly, because our investment bank accounts don't have the same interest rates. So we were moving from, potentially a higher interest rate account than up to a lower one. So what the committee at the time approved was just around rebalancing and making that process more efficient. So we take a look at the rebalance amounts on the date that we rebalance, and we're allowed to put those funds in, and we don't have to move them around as much. So we're able to leave operating funds in higher interest earning accounts more strategically. Well, and so the committee at the time had determined that didn't increase risk, and it was going to help out with the yield. So the second change that we report on there is just around that, and that's more in line with how other municipalities would be managing their funds as well. So those were two changes that were brought about. The first one was the banks introduced a new product, so the high interest savings accounts were there, so that precipitated that change. And then the next one was just around cross-jurisdictional scans, where it's like, okay, how are other municipalities doing this, and is there anything we can do to be more efficient? So at the current time, I'm not aware of any products that are out there that we are not allowed to invest in that would meet our policy objectives that would help us with those. And I'm also not aware of any other sort of practices that would help us be more efficient to earn more. So that's why I was saying that, for this year's annual review, like I wouldn't have any changes in particular. We sort of used all the tricks that I'm aware of at this point, and it's something we're always looking at too, right? So it's an opportunity for you guys as the investment committee, if you're aware of something, whether it's a product in the market or a business process that might help efficiency, that's the time to affect that change. And again, we've not done we've not sort of put this out there. We sort of come once a year to the policy advisory committee, and it's been staff saying, here's what we recommend. So I was hoping to, again, put it out there in advance just to have people thinking about it. And, maybe we come to September and there are no recommendations, but at least we've thought of it. Or maybe there's something that you guys are aware of that we aren't. So, I just want to give everybody enough time to take a look at that so that we have that fulsome discussion.
Thanks, I appreciate that.
Thanks. You guys, I'm ruining my record. These meetings are usually very, very short, so I apologize. I hope nobody had sort of 12:30 plans that they were making. Anyway. Okay, so that's what, I guess we do have all those in favor of saying yay. So Annie, I'm not sure if we actually need a motion for this. We're just going to, put it out there that the date is going to be, we'll do a review in September. And I guess, is there actually an official request to document the previous changes formally?
Thank you, Chair. I have noted the summary to come back at a future meeting. I believe that it would be standard practice for that discussion to take place anyway. So I don't believe that a motion will be necessary here. It will be captured in the minutes.
Excellent. Okay, thank you. All right, so I guess we'll move on then to added items. So I have nothing else. And yeah, the date of the next meeting is June 6th, 2022. And we were talking about having that in person at City Hall. If that's okay with everyone.
Right.
And we'll buy you lunch. So you don't have to worry. We'll be at noon, but we will provide lunch. So yeah. And with that, if there's nothing else, I'll ask for a motion to adjourn.
I can move to adjourn.
Okay, thank you very much.